What's up, agency owners? Jason Swenk here, and have another amazing guest, a repeat guest, and we're going to talk about the scary things of bookkeeping and like how many people are so much overpaying bookkeeping, or if you're doing the bookkeeping yourself, how much time are you really wasting on this? I mean, you should be focused on other things. And so we're going to jump into this. So let's go ahead and get into the episode. Hey, Nate, welcome back to the show.
Thanks, Jason. I'm glad to be back.
Yeah. So for the people that have not heard you on the other episodes, tell us, tell us who you are and what you do.
Okay, I'm Nate Jensen. I'm with Agency Dad. We are an accounting company that we focus on profitability for agencies. We do a lot of bookkeeping, but we also really our main focus is actually helping agency owners understand what's driving their profitability from the numbers standpoint, so they can, if they know their data, they can make a lot better decisions.
Awesome. So let's go ahead and jump into it. I see a lot of agency owners doing their own bookkeeping, and it drives me absolutely bonkers and
Yeah, me too.
crazy.
Me too.
What? Why should they not be well, I'll get you to talk about why they should not be doing it. What are some of the mistakes and stuff like that? But tell us some of the mistakes and why they should not be doing that, and then I'll get into it as well.
Okay. Okay. And let me be clear. I think there is a situation when it makes sense for someone to do their own bookkeeping. So let me first distinguish that. And I know bookkeeping is not the most sexy topic, and it's usually the last thing that maybe creative types or entrepreneurial types are really interested in, which is kind of why we exist, right? It's something that we are an expert in, and so I want to take everybody's bookkeeping and everybody's number questions into my hands. But when somebody's doing their own bookkeeping, uh, one, typically that's not their area of expertise, right? If it was, they would have a company more like mine rather than a marketing agency. The one situation, Jason, where I think where I would say yes, go ahead and do your own books, that's fine, is it's typically that guy who's just getting started. He's maybe got his first client, and they're doing some pay-per-click, right? So he's got like one invoice a month. He's got two charges from Google a month. It's going to be very hard for me to come in and provide value to somebody like that, right? But if someone has hired their first employee, they've got several clients, and especially if they've diversified their offering. So hey, we instead of just pay-per-click, we now have someone that does SEO. They're expanding in that way. The complexity of the data grows exponentially, and so tracking that data it's not just, hey, I'm just going to enter this in QuickBooks and move on. The data becomes important, and interpreting the data becomes important. And I've said again and again, 95% of your data analysis happens in your data entry. And so if you don't know how to enter the data, again, not just putting it in QuickBooks, but like structurally, how should this look? That's where you're going to run into trouble. The other thing um, is, for me, it's the opportunity cost. I think you and I have talked about that concept before. Is if you started an agency, maybe you're an expert in getting clients, maybe you're an expert in SEO or pay-per-click or whatever your specialty is. How much more money could you be making if you focus on what you're good at instead of on what I'm good at?
Yeah, I always look at the opportunity costs. I mean, that's where I was going to rip them for if they're doing their own bookkeeping. But I also agree with you. If you're just getting started, and it's like one or two transactions, like yeah, you can do that yourself. But it's also about, I find, even looking back at a couple of the businesses that we had, you want to set up everything in the very beginning the right way. And so
Mm-hmm.
let's say you start doing it and you're doing it the wrong way. Like you were telling me a story where you were in someone's books for like 5, 6 months trying to fix crap from what someone
Yeah,
else did.
yeah. So that, and 5 to 6 months maybe is a little embellishment. It was about 4 months. I had a CPA call me and say, "Hey, this guy hired us to clean up his books, but we had no idea how deep the rabbit hole was." And he said, "I know you're really fast. Could you come in and take a look and see if you want to do it?" And so a colleague of mine and we went in, and it was about 4 years of data that we had to we really got to the point where we just said, we're just going to start from scratch. We're not trying to fix the books anymore. We're going to get all the, the bank statements or whatever from prior years and just rebuild everything. And it took us about 4 months. And the crazy thing is, it's not just that, in this case, it wasn't even this guy doing his own books. He had 2 full-time employees doing his bookkeeping. And he had 4 separate entities. And so they had to communicate back and forth, and they weren't doing that. And so after they'd been there about 4 years, everything was a mess. We came in. It took us about 4 months to get it cleaned up. And once we had it cleaned up, I said, Dave, look, you have some complexities, but it's really not as hard as you think it is. And we were able to replace those 2 full-time bookkeepers with 1 part-time bookkeeper going forward. And for us, it was just a matter of having the right systems and the right processes in place and understanding how the data needed to get in there in the first place so that everything was clean, right? I mean, if you can't print off a P&L at the end of the month, as a minimum, you've got a problem.
I like that. This should be a T-shirt for you.
Right.
Why? I see a lot of people using their CPAs to do bookkeeping, and I think
Mhm.
that's personally, I think that's a mistake, just because you're paying huge fees.
There's actually 2 reasons I would recommend against that. Uh, Now, you can certainly do worse than having a CPA do your books. A CPA is at least going to keep them clean. They're going to keep things reconciled, right? So there's a positive there. And the cost is certainly an issue, right? If you're paying anywhere from 125 to 350 an hour to have your books done, you're way overpaying. But in addition to that, is a CPA. They're generally going to keep your books based on their tax knowledge, right? Which is fine. Uh, they're going to say, hey, we want to enter stuff like this. We're going to do our depreciation schedules, and we want to make sure that we can do our taxes at the end of the year without spending too much time on it, right? So there's nothing wrong inherently with that. But with my company, we set up, well, I'm a CMA. Most people don't know what that is. It's a certified management accountant. And so when we set up somebody's books, structurally, we're looking at not how do we do this like for tax purposes or just so we can reconcile. We're looking at it saying, what do we want to get out on the back end? What is the information that we need to know from this data to make good decisions? So we want to know, can I hire somebody? How much should I charge? Can I give a raise? Uh, can I take money out of the company? What's the value of my company, right? So I mean, this is why you need to think about this. It's not just entering data. Let's say you want to sell your agency a year from now. You're going to have very specific questions about valuation, about decisions that I make now. How are they going to affect the value of my company over a year? On the other hand, if you're saying, what, I'm looking longer term, I'm going to sell my agency maybe in 5 years. Those questions are very different, and the data or the information that you need from the data is very different. And again, it all starts at that entry, the data entry portion. You've got to know what you're putting in or why you're putting it in, so that you can answer those questions on the back end.
Yeah, and as we talk to agency owners all the time, especially when I come into an agency and I'm asking them really detailed questions about buying their agency, and they can't answer. They're like, "I'll have to get back to you." Well, I don't
Mm-hmm.
know it. Like, those are huge red flags for a
Oh yeah.
potential buyer, and you should know where your company is at every time, and be able to go, well, we need to do this in order to adjust it. Because even if you're planning to sell one day or want to have an opportunity to sell, you should have everything in order. I remember when we went through our acquisition with solar, when they asked a question, we were able to get them information like that. We were like, here you go. And they were like, ooh, that was quick.
Mm-hmm.
We're not used to that.
Right. Yeah. I think you know this, Jason. One of my flagship products is a financial dashboard that we provide, and we've actually just upgraded the platform that we use for that. And part of the reason we did that is it's got a great tool where it has different levers you can pull, right? So if we say, hey, how do I increase my gross profit margin or my profitability margin or my compensation as a percentage of gross profit or whatever, we can plug that in and say, what levers can I pull? I can change my price, I can change my volume, I can change my certain fixed costs. Uh, and so I know we're talking about bookkeeping mostly, but you've got to be able to know what those levers are and understand how they affect your business, either your profitability or your valuation. And that's why keeping that end in mind is so important. If you say, hey, I'm going to sell sometime in the future, what do I need to do now to maximize my value? You've got to have the data in correctly, right? That's the first step, structured right. But then you've got to know those levers. How do I maximize my value? What levers can I pull? How do I do it? And the other thing is, because we have so many agency clients, we also do comparisons between all of our clientele. And so I can look at my clients and say, hey, out of 15 clients, you're number 14 in this metric. Here's what my other clients are doing that are nailing that metric. And so you can then drive those internal processes, I guess, change those internal processes to improve that metric to get to your goal, which may be different from someone else's goal.
Yeah. And then lastly, let's talk about why is it important for agencies to track time?
Oh yeah, I'm glad. So this is one of my pet peeves, and it's one of the things that I run into most often with a new client that's kind of a big change, right? And it typically starts because somebody's been their own bookkeeper and they got too busy, so then they just handed off to somebody else. And they're busy, doing their pay-per-click or building their business, hiring employees. And one of the first things I say is, hey, we need, you don't track time, we should start tracking time. And sometimes the client will push back, but usually the client says, oh, I know we should be doing that, but all my employees don't want to, right? But here's the thing, is you know this too, is that in an agency, your major cost is going to be your employees' time or your team's time if you outsource. If you don't understand where people are spending their time, there is no way you can identify which client relationships are not profitable. And again, this goes back to my statement. 95% of your data analysis happens in your data entry. Tracking time is a data entry task, right? And so if you're tracking that time and you've got the systems in place where you run a payroll and all that time just gets sucked into QuickBooks or Xero or whatever, you can easily run reports that say, here's your profitability per client. Uh, and you can either run that in QuickBooks or you can throw it in a graph in Excel or somewhere else. And it's really easy to identify this client is using so much of our time. We need to make a change. Uh, I'll be honest, this often requires a cultural shift, right? It's not just, hey, everybody start tracking your time and everybody's like, oh, okay, that's what we're doing. There's often pushback. Sometimes there's not. Sometimes the employees are very much on board with helping drive that profitability. Uh, but without that data, you know, there's just no way to identify those problem relationships. And similarly, there's no way to identify the really profitable relationships. Because if you have a great relationship too, you want
Yeah.
to understand why and duplicate that as much as you can.
Yeah, for many years we didn't track our time because like you said, it's just something else that you have to do. And then
Hmm.
I said, we're going to start tracking our time. And
Hmm.
like you said, it was a cultural shift.
Yeah.
And what we found was pretty scary. And I'm glad, like, I was hitting myself. I was like, why didn't I do this sooner? Because we were losing money on 60% of our engagements. 60%
Really.
we were losing money on. So I just want that to sink in to you listening out there. 60%.
So it's rare that I don't find someone that's losing some money, losing money on at least some engagements, but 60% even is actually pretty high. So that's I'm glad you started doing that.
Very high. But we
Yeah.
were we were still profitable because the other 40% was highly profitable. But what
Right.
that allowed us to do was adjust our pricing and to figure out what we weren't going to do anymore.
Hmm. Jason, let me respond to that, and then I have a question for you if I can.
Go for it.
Um, I've had a client who I went through and did an analysis and said, hey, if you just stop doing this stuff, right? And in his case, it wasn't clients, he was a product company. But I said, if you just stop producing this product, your profit's going to go up $4,000 a month. Like, you don't have to sell it off, you don't have to do anything, just stop. And he wouldn't do it because he was very, uh, how do I want to say this? His name was on the bottle, okay? And it was his baby, and he just wasn't willing to let it go. And I'm like, you can do less and make so much more money. But I see it all the time in this time tracking, right? Once you identify those clients, um, you can, if you can change those relationships, great. But if you can't, there's situations where you can just stop working for those clients and your profit goes up. So why wouldn't you do that? But Jason, the question I had for you is, how did you manage that cultural shift in time tracking? How did you? Because I still have clients that they want to do it and their employees are somewhat on board, but not fully. How did you get through that?
Couple things. I basically told them uh, our agency won't be around if we don't do it because I have a feeling that we're losing money on some engagements and some clients that we're doing. So we want to track. It's not tracking you. Like I basically told them, I don't care if you do 40 hours, but I
Hmm.
want to know when we're actively going to pitch new projects and engagements, we need to know what's our break even point. What's the profitability in order for us to hit our numbers? And then I made it a requirement. I said, if you
Hmm.
don't do your hours, that's job threatening. Three
Right.
strikes, you're out.
Nice. Nice. I've seen what I've experienced with this on the cultures that push back on it a lot. It almost seems like the people who complain the loudest about having to track time are the people who complain the loudest when they don't get a raise,
Yep,
right?
exactly.
It's like we don't have the data to give a raise. We're not as profitable as we could be. So it's
You know, one
I,
exercise I tell our mastermind members to do every quarter is literally take all their employees and
mhm,
rate them on a scale A to F. And then what you'll start seeing is, let's say you have a couple D's and F's in there,
mhm,
which those are the ones that are complaining. They're the ones not doing the timesheet because they're hiding things.
yeah,
And I go to them, I go, is there any employee that would, if they came to you tomorrow and quit, that you would be happy with?
mhm,
Right? I was like, get rid of those people. I mean,
right,
that's the other way that you can clean up some of the culture shift because you have some of that
yeah,
poison. Those poison people, those D's and F's that are complaining, they're
mhm,
going to complain to everybody else, and then everybody else is going to be like, "Oh yeah, why do we have to do time? They're just trying to track my time and all this bullshit." I'm like, "Fuck you, you're out."
mhm, yeah, yeah. That's great. And I know we're in a market right now where labor has a little more power, I guess, than they've had before. Uh, but I still think you've got to make those hard decisions. If someone's toxic, and this is way off the bookkeeping topic, but if someone's toxic, they're not worth keeping.
Yeah, but and totally agree. And going back to when you were telling your agency client, like if you stop doing this, you'll make more money. I remember
Mhm,
I've had clients over the years where they're like, I have them list out all their clients. I go, how profitable are all of them? And then they'll be like, oh my god, these two were losing money, but they
mhm,
wouldn't get rid of them.
yeah.
And I'm like, why? They're like, well, that's paying payroll. I'm like, no, it's not. It's literally it's costing you money, and it just
Yeah.
wouldn't sink in.
Uh-huh. Yeah. And it's again, this goes way back to your first question. Why shouldn't people do their own bookkeeping? Uh, if you have someone in there that knows your industry, that knows, understands data analysis, they can put those numbers in front of you visually. Like I love using charts and graphs and so forth. And I can show you exactly why they're losing money, and I can show you what's going to happen if you make this change, right? How's your profit going to go up? When you're typically what I see is someone doing their own bookkeeping is someone who's already overwhelmed. They've got so much to do, but they can't quite afford, they feel like they can't quite afford to pay someone else to do it. Um, and so they don't have time to really kind of deep think about those things, right? And if they had that time, they would say, "Oh wow, yeah, I can make more money by just changing this one thing." Um, so yeah, for me, it's one of the first things that I would probably say offload. Now you got to be careful. You don't want to say, "Hey, first guy in the door, hey, you do our bookkeeping." I also see a lot of people, they have a receptionist and they're like, "Hey, do you have any extra time? Can you do the bookkeeping?" Right? Um,
It's
I
crazy. It's craziness to me.
right. I mean, you're freeing up your time, so you're getting, you may be solving the opportunity cost problem, but again, you may be causing yourself problems down the road when you find out that the person doing your bookkeeping really didn't know what they were doing.
Yeah.
In fact, one of my first agency clients from almost 5 years ago now, who Adam. Uh, One of his big concerns was like, I don't. Again, this is 5 years ago when I first started. He's like, I don't know if we're invoicing everything we're supposed to. Like, we might spend $30,000 on doing. They're a full service agency, right? We might spend $30,000 on a direct mail campaign, and I don't know if our bookkeeper knows to invoice for that. Like, did we just lose 30 grand and make no profit? And he's like,
It,
I don't know. And
it's
what's more,
scary.
I don't even know how to tell.
Yeah. I remember going through that. I mean, you're like,
Sorry.
there's invoices, there's low hanging fruit. There's literally hundreds of thousands of dollars
Hmm.
that you're missing. And it's pretty
Yeah, for
scary.
sure.
It's a big decision on, picking the right team member or team in order to, make sure it's not garbage in, garbage out. Like, you want to be able to make really good decisions. You got to base that on the numbers. So,
Yeah,
well, this
yeah.
has all been amazing, Nate. Is there anything I didn't ask you or that you want the audience to go to?
Just one thing is that comes to mind is I wouldn't. Price is a factor, right? Like we talked about, don't have your CPA do your books because it's too expensive. I wouldn't pick the most expensive person. I wouldn't pick the most inexpensive person. I would take the time to understand who you're hiring. Okay, and you can hire somebody in house if you're big enough for that. It's hard to scale sometimes when you're just getting to that point where you need a bookkeeper, which what makes a service good. Um, but understand what people's price is, but don't make a decision on that. Understand if they know your industry. Understand, uh, have they been doing this a long time? Are they just? Oh, this is one thing I was thinking of yesterday, actually, as I was preparing for this. Is there's a difference between someone who understands accounting and someone who knows how to use QuickBooks, and it's important that they know how to use your software, whatever software you're using. But you do want someone who knows a bit of accounting. And a simple question is, if you ask somebody, hey, does a debit increase or decrease your assets? And if they say increase, with no hesitation, you're good, right? But if they hesitate or say, oh gosh, let me think about that, they're not thinking they're not thinking like an accountant, right? So it's a super simple test to just kind of understand, is this an accountant or is this just someone who's learned how to use QuickBooks or Zero or whatever the software is?
I like that
Uh,
test. That's pretty cool.
yeah, super easy. Because that's how I think about it. When I enter a bill, I'm thinking, what are my debits and my credits? Someone who knows how to use QuickBooks, they're just thinking, enter bill, and it goes to this category, and
Mhm.
it doesn't go beyond that. So just that gets to summarize that. Just know who you're hiring. Don't hire the first person that walks in the door. Don't just hire the cheapest person. Know who you're actually giving the keys to your kingdom.
Awesome. Where if people want to get your help and ask
Mhm.
you, does a debit increase your assets? Uh, where can they go?
Website agencydad.money. Uh, we got a contact form there. Um,
Awesome.
yeah, and yeah, there's a contact form there. It'll email me, and happy to talk with anybody. Oh, and just so people know, I'm not like a hard salesperson. I'm much more the kind of person that says,
You're an accountant, so you're not a
yeah,
salesperson.
yeah, yeah. I'm looking for a good fit. I'm fortunate, Jason, that I've gotten to a point in my career where I'm not saying I need more business. I need more business.
That's
I
good.
want the right business. I have fired clients because it just wasn't worth my time, and so I'm not interested in taking on a client that's not a good fit. Uh, I want someone that I can help, and it's going to be a good fit for my team.
Awesome. And I can vouch for you. I know many of your clients and many people in Mastermind use you, and we're even talking about you helping us out. So make
Cool.
sure you reach out to Nate if you guys want help. You can ask him the secret question. See if you were paying attention to the episode. And until next time, have a swank day.